Hello, everyone. Welcome back to the Trading Room. I'm Shane Vernier, and this is Trading the FOMC Minutes. Today, we're going to be taking a look at the latest FOMC Minutes. We're going to talk a little bit about what you can expect from this release. We're going to look at our interest rate expectations, and also we're going to take a lot of questions. Any questions you guys may have, be sure to ask. Now, remember, the FOMC Minutes is a unique economic event. It's not a press conference. It's not an interest rate decision. It is a written brief that is released here in about an hour that tells us what exactly the dialogue was between FOMC members of the committee, what it was inside of that room. That's it. So a lot of folks tune into this live stream. They go, Shane, what is it? Well, I'm telling you what it is. Now, is it a big deal? Is the FOMC Minutes a big deal? Absolutely. It's a huge deal. And I'm going to talk a little bit about that here in just a little bit. We've got movers and shakers. We've got questions on the Euro USD. I had a big request come in to say, hey, you got to look at the dollar yen right now. The dollar's on the move. All of a sudden, the dollar index is up about 0.5%. Sort of a surprise for most of us. We're having Cloudflare issues, so if we just went down, we just went down. It's been like this all week long. I don't really know what else to say about it. We've definitely had some internet problems this week. It's been a lot of hacking, a lot of things going on that aren't exactly great. You're going to have to please stand by here. It looks like we've lost our feed to our Okay, it looks like we're back up and running. Cloudflare has been up and down all week long. It speaks to the tech issues that really have been sort of prevalent across the internet. I've had fill issues. I've had order placement issues. I've had some real issues this week. So if you have avoided the internet trials and tribulations that have come across the board this week, congratulations. It's been a really ugly situation. So I do apologize for the quick delay. We had to get hooked up again. Looks like we're now up and running on all the channels, which is fantastic. So good to see everybody back in the room. A lot of familiar faces, a lot of new faces. Yes, sir. Good to see you. Lucas, good to see you. Lucas. T. Marina, always a pleasure. T. Jip Smith, Metro. What time are the news, Jip Smith? The news is going to drop in about an hour. About 60 minutes from now. Just lost the connection. I know, T, back online. It's ugly. It's ugly out there. Cloudflare out of Seattle has been an absolute nightmare this week. That is where my servers are. They're over, not my personal servers, but our Cloudflare servers are in Seattle, Washington. Those have been up and down all week. No doubt the result of a hacking attack. From what I hear, it is one of the largest scale AI hacking attacks that have ever occurred. So we're in a new era, ladies and gentlemen. We're in a new era of internet safety and security, and I have to tell you that it has been an absolute nightmare trying to do all the things that I do tech-wise. It's been tough. It's been tough this week. So we're doing the best we can here for you, though. Bobby Bob, good to see you. Bobby over in the How to Trade community. Lita, good to see you. Lita. Andrea Garwell, hi, Shane. The Euro USD is forming a doji on the monthly. Interesting with the move down today. Will the weekly 62% hold to see this pair reverse? I think so. I think we're going to look at the Euro USD. I got a couple of those levels lined up and ready to rock. All right, let's get right out to price action here. This is the dollar yen. This was given to me earlier today. This question said, hey, you got to look at the dollar yen. And really, we're up and away. We're breaking out here on the daily. You'll notice that the daily range is broken above that upper Bollinger Band. That's interesting to me. I would love to get a top here so we could buy in on a 4-hour chart or something like that, but it's just not developing. So anytime I see a market that's beginning to trend, I want to know exactly what I need to know before I need to know it. And this is an interesting type of a situation right there, horizontal line, sort of the top. That's going to be your recent high, 160, 195. Okay, that's a ways up the queue. And then this area right here, this swing high, that's going to be what? That's January's high. That's the yearly high. I would be very cognizant of that level if I was trading the dollar yen. So if you're trading the yen, definitely want to take a look at that right there. And that's your high of 158.88. That's the yearly high. We're at 156.80. Until that point, I would say all systems go to the top side. Right now, the dollar is starting to gain strength. And the reason why is we don't think we're getting a rate cut anymore in December. That is a major, major, major change. Let me see, Ruben, good to see you. Hello, good to see you back and good to catch up today. Absolutely. Welcome, Ruben. You got a nice move here. As far as what can we really do to get in on the move? Now, I'm always a big retracement guy, and I show these retracements all the time. A lot of folks don't understand them or don't like them, and that's okay. You don't have to. The 920 crossover, the 9 EMA, crossing over the 20, that's already happened in this dollar yen. So unless we go to a real short time frame, which in my view on any crossover strategy is an incredible gamble, then there's no reason really to force the issue. So right now, I'm looking at this top. Maybe we get something to set up right around 157 and then a pullback from there. Still, you want to be bullish. You want to buy. but you just got to get good trade location. To me, really any reason to join the trend at this point. 4-hour chart, I would absolutely love to step up and bid this. You'll notice our RSI has us in very, very deep in overbought territory. You'll notice typically I use that as confirmation to go against the prevailing trend. Well, here's the thing about trends. A lot of times when the RSI is in overbought or oversold territory deep, it stays there for a while, and that really is all we're looking for. We're looking for a pullback here. Maybe this RSI comes back down around 70 or so, and then we're just looking for price to sort of mill around here and get a nice tight scalp. There's a lot of room there. Swing high right there is 87, 38% at about 56.23. So you've got an opportunity there potentially to grab, 15 to 20 pips, real tight trade. I wouldn't let this thing run against me, especially if the FOMC minutes delivers something that goes against the dollar. Definitely want to keep an eye on that. Now, as far as the Euro USD, interesting point, Andrea. What you have here is a 4-hour chart that is, this is our 920 crossover, and I wanted to start with this. We'll get into Fibonacci's in a second. That right there was your cross under. So the 9 crosses under the 20. You've got your sell signal. That's our purple bar right there. If you're familiar with the coded strategy, if not, How to Trade Calm on YouTube, go look at the video. It's called the 920 EMA strategy coded. This right here, very, very interesting, right? So there's your sell, and it's worked like an absolute charm. It was a great position sell. There's no question about it. Now what are we looking at? Well, we got a situation now where potentially we have an opportunity to buy into this thing. So the question from Andrea was, how does it look on the weekly? Well, I said, well, let's go to our weekly chart. Interesting, isn't it? Very, very tight. You got a 2-week range. It's not the best Fibonacci range in the world, believe me. That's just sort of a spike high or a spike low and a spike high, and there's your pullback. Will the 62% level hold at this juncture? You're trading 115.30. The FOMC minutes will tell the tale here. For me, I would be very, very leery about holding this one much longer if you took the bid from 115.41. I'm not saying that you're wrong, or I'm not saying that these levels are incorrect, but this situation right here, a lot of heat. So if you did buy from up here, it's okay. I would probably cut this thing off as soon as it traded underneath the quarter handle, which could happen right now. If you wanted to risk it a little bit more, you could probably put your stop loss somewhere down in here beneath 115 and sort of bet that you could at least get out of break even on a bounce from that zone. But in all honesty, the dollar is definitely trending today, and I don't know that you want to get in the way. So if you haven't taken the bid yet from 62, don't take it. I can't never say that. I always run into trouble telling people to take trades and don't take trades. If I was in the market and I hadn't played the Euro USD today, I would not take that trade to the long. I wouldn't do it. And the reason why is there's just too much pressure to the downside. There's too many sellers. Now, as far as what can we really expect potentially out of this pair, well, there's a lot going on there. And Euro USD, we had CPI sort of from the overnight. Euro EU CPI came in line with expectations, which is fantastic. What you have here is an interesting dynamic, sort of our long-term level, what I would call the kill zone, is down there right around 113, probably 113 and a quarter to 113 even, is a pretty darn good zone to be bidding. We put that level out earlier in the month, and we've been sitting on it for 3 weeks. So what I would recommend, if I was trading this, I'm still looking for a little bit of bearish pressure, and that is predicated upon potentially a hawkish FOMC minutes, and that's pretty much what the markets are telling us. They're expecting some hawkish dialogue there, and if you don't get that rate cut coming in December, you're going to see a strong U.S. dollar. Remember, if you want to trade anything that we talk about today or any of the ideas, or you just want to get involved in the markets, switchmarkets.com's got you covered. Head on over. You've got thousands, and I mean thousands of markets that you can jump into. There's a lot of bonuses, and for new customers, Black Friday is coming up. They're going to be announcing some big-time bonuses, some interesting stuff in the next several days. I can't tell you the details, and it's not a spoiler or a teaser or anything. I just can't. I wasn't allowed to tell you the details, but it's a pretty good offer. It's something that if you're a new trader or if you're new to Switch, you probably want to take a look at it. It's going to boost your purchasing power quite a bit. And for everybody else, existing customers, those maybe you've been with Switch before and left and are going to come back, they've got all sorts of bonuses, all sorts of things that you can do to get involved in the market with a little bit of meaning. So you definitely want to take a look at that for your Black Friday specials. Those are coming relatively soon. Let's see, I'm back behind on the live chat. Let me see, Andy Tong. Silver looks like the start of a wave 5 on the 4-hour, 62% pullback. All right, we're going to go ahead and take a look at silver. We've got to get involved. We've got to get involved here with Bitcoin, though. Bitcoin's really a big story, and there's a huge level with Bitcoin. Let me see, Vashon, you going to trade gold? Absolutely. I already traded gold today. Had a breakout above yesterday's high in the futures markets. It was a fantastic trade. We can show you that as well. As far as what do we want to do with gold now, we'll cover it. Silver and gold, always very, very popular, so I'm more than happy to do that. Where do you see the FOMC doc? It's going to be on the FOMC website. So just go ahead to Fed. I think it's like just fed.gov, FOMC.gov. Run a quick Google check. It'll pop up first for you. It's relatively easy. I'm not going to even bother reading it here on air because it's convoluted. And honestly, what matters about the FOMC minutes? What matters on the FOMC minutes isn't necessarily what is in the document. It's how the markets interpret it, but it's also how the media grabs this thing, spins it, and runs with it. A lot of times the spin that comes out of these documents is what drives the markets, and that's why it's going to take about 15 to 20 minutes before you really start to see the market move, and you're going to see it probably going into that Wall Street close. So if you're going to show up and you want to trade the FOMC minutes right when they come out in about 49 minutes, you're probably going to make a mistake. It's usually what I call a delayed fuse. And what a delayed fuse means is the news comes out, we all sit around and wonder, and then what happens? Then the market moves. It's a lot like an EIA supply report that we see each and every week. So be very, very careful when you're trading the FOMC minutes. We're going to look at what to expect here in a second. A lot going on, though. Hi, Vian Gun. Fian Gun, all right, 1790. Hi, how are you? So I hope that answers some questions on the Euro USD. A lot going on here. We've got to get into Bitcoin, though. This really is the developing story. There's a lot of things going on right now. We're going to talk about some of the peripheral market drivers, but this is a big one. Why is Bitcoin falling apart? And it just is. It's falling apart right now. We talked a lot for the past several months about the importance of the 100,000 threshold. Put it out in the Switch Markets newsletter that came out yesterday. Talked a lot about, hey, listen, if price does not bounce from this test under 100,000 and get back up to 100,000 quickly, the damage could be significant. This chart right here is an oldie but a goodie. I'm surprised if you haven't seen this on Bloomberg, CNBC, or any of the big media outlets. What they like to do is they like to pull these giant macros up and sit there and act smart after an event already happens. That happens every day. We do it a little bit here. To be honest, we'll pull up a winner here and there. But what we need to understand is, what is this in front of us? And it's very important that you understand at least some of these tried and true, real basic technical and analytics tools. And what you have today is you have the 50 SMA crossed under the 200 SMA on Bitcoin. Daily time frame. This is a textbook death cross. They call it the death cross because typically it's the end of any bullish pressure and it's the beginning of a bear market. So, I mean, I hate to be so dramatic. It's a death cross. I mean, trading really shouldn't be life and death, but if you trade with enough leverage, it certainly can be. What I would like to stress here is there was your cross under. The 50 crosses under the 200, yeah? You're right there, boom, boom. Probably right there is when the bears entered the market in force. Clearly, there was a lot of sellers. No question about it. But right here, what happened on the 16th of November, you started to really see the selling, and the selling's been pronounced, and the selling's been big today. So if you're going to be in this market, probably right now, if I had to pick a side, I would say short is the right way to be, but that can change. I'm still very bullish Bitcoin. In my view, you're seeing a major wipeout of retail retail holdings. There was a stat that came out yesterday, showed how many times in the last few years that Bitcoin has pulled back 25%, that Bitcoin's pulled back 35%, that's pulled back 50%, and it was staggering. The bottom line is this. This is one of the most volatile asset classes in the entire world, and we're talking crypto, and we mean it. When we say volatility equals crypto. Now, just because we traded flat right around between 125 and 100,000 for 4 months, you pretty much knew that there was a breakout coming. We just didn't know which way. We were either going to push higher up to 150 or 200,000, or we were going to come back. We're coming back now. There's no question about it. This has been an epic fail for the Bitcoin bulls this month. Negative 18%. That's staggering. I mean, if you took that hit, I'd like to tell you to shake it off and keep going, but if it was a leveraged hit, you're probably broke. If you're holding this in the cash markets, then you're doing all right. It's not the end of the world. Even if you bought 125,000, it's not the end of the world. What that's going to do, though, it's going to tie your money up for a long time. Just be ready for it. So what do we have happening? Major washout. This is clearly a major washout. This was a bullish pennant that I had going into this month. I thought that it was a fairly astute observation. I didn't see many other folks talking about it, but it really was. In my view, boom, there's your move, there's your bullish, and that's sort of your pennant. That compression area was a real big deal. It was a really big deal because you had a key level there at 100. Compression, compression, compression. We knew it was going to break. We talked about it for 60 days. We said, when this thing breaks, it's really going to break. Now, it's not an accident that we failed up there right around 125,000. It's not. That's a key level to the top side. The sellers dug in there. Did we know that? No, we didn't know that, but they defended it. Now, the next time up, probably not going to be any sellers left, but how long is that going to take, and when can that happen? Could be a long time. But when we're playing crypto, I look at cash crypto like stocks. I really do. I'm saying, okay, where can I get the best entry point? Where can I get involved with the most amount of meaning? I want to get in and I want to mean this. I want to make some money. Well, right now you're starting to get an opportunity to make some money. Now, there's an old saying, billionaires are made in bear markets. That's basically when people go in with a few $1,000,000 and they buy things on a severe discount, and then they ride the wave up, and then everybody's rich and happy, and that's all great. For us, for retail traders, we got to think a little bit more aggressive than that. Now, a bear market was back in the day. Bitcoin was trading 17,000. It was the first YouTube video I ever made. It's back on the Forex Signals TV YouTube videos. That was years ago. We basically called the bottom of this thing right around 17,000. All right, not a bad trade. Okay, we're not in that era now. We are in a bull market for Bitcoin. Is that changing a bit? A lot of people say it's over. No way. Not a chance. You've still got a major uptrend here on the monthly. This is a textbook washout. Is it any different than what happened here? Is this any different than what happened in February? Not really. You're off 17%. You're off 18%. It's the same basic dynamic. The only thing was this was a very, very flat area for a longer period of time. So right there, what's your high? Your test up there was 110. Boom. Where did you come off to? Your low was 76,000. Boom. Rallied 125. So this right here, I'm not convincing anybody to hold a position they don't want to hold. I'm glad I'm not holding right now, but I'm starting to think about where's the value here. Well, there's one thing that's different. This didn't close beneath our 13-month EMA. And right here, you're looking at closing underneath the 13-month EMA. That's a big damn deal. And the reason why is the last time we were closing down here, things got real ugly for Bitcoin. Real ugly. So I'm interested to see exactly what happens where we close this month. I have a hunch that there's a big rally in here, and here's going to be my entry point. It's very straightforward, very simple. Basic Fibonacci retracement. We're going right off of that spike low to that spike high, which is sort of the current wave, right? The current uptrend wave. Now you're pulling back. We've absolutely shattered 62%. Had a few longs right above there, worked pretty well, got out. Had some shorts under there to open today, got out. Very, very good trading, awfully volatile. What do you have now? You got a kill zone down there right around 85.25, 85.5, and you're looking to get nasty right there at your Bollinger midpoints at 52, or excuse me, right there at 84. Okay, 84.2, 85.2. I'm looking at 87.50 potentially as being a bid. I love it. If I could get 85.5s, I'd love it all day. That's pretty much what I'm going to wait for today. But this is fascinating. This is one of those opportunities that should work out really, really well. Now, the question that we're going to have as traders, and this is hard. When you're looking at this Bitcoin, we know we're in a bullish trend. We're licking our chops, and we can't wait to get into the long side of this thing. If we jump the gun and we go right now, there's a good chance we could be right. But if we're wrong, and that thing goes from 89 down to 85 and maybe takes us out at 75, then we're in big trouble. So we've got to really use our heads and be patient. I know it's hard being patient when there's this much money flying around, but you've got to be patient. You've absolutely got to be patient. And right now, being patient means 85.5. If you want to be hyper aggressive, 87.5. I'll be eyeballing 87.5 towards the end of today. I would be surprised if we don't get there today. This is a free fall. I mean, this is a nasty, nasty chart, especially if you're a Bitcoin bull. So I did want to cover Bitcoin. I think it's an interesting market. It's definitely, there's your death cross. There's a potential support level. You've got a chance there maybe to make a little bit of money. Now, there's a lot going on the tech front today before the FOMC minutes. I'm going to go over here in just a second. I think that we got to cover some news first. And as much as I said yesterday that I was not going to cover Epstein, We know what's going to happen here, and I'm going to show you a prime illustration of exactly the kind of impact that this thing can have. The documents haven't been released. Congress voted unanimously to release them. Trump's going to sign the bill to release them. It's going to be up to the DOJ to see what they release, what they redact, and what they release. This could be a major financial event, and I'm going to tell you why here, and you can take it or leave it if you agree or disagree, but understand that this is going to be a market driver. We're already seeing evidence of it, so definitely want to do this. Yeah, I'm going to trade. Let's see. Let me see. VN, hi. Let's see. Joni boy. Good to see you, Joni. What the bottom you think for Bitcoin now? Well, I mean, the bottom for Bitcoin. The thing about bottoms is it's tough to pick. Typically, they get to an area where you think you should base, and then you go a little bit further, and then you reverse. So for me, understanding that, I think that the bottom for this, we're talking about a super cycle, and you make a great point. The next super cycle is coming. Well, I agree. I don't believe 125 is the top of this thing, not by any stretch. I think you're going to see probably a swift rebound. The question is from where. 85.2, I think that has an incredible chance to be the bottom. I really do. I think without any sort of big regulation coming in or a game changer facing crypto or potentially rate hikes instead of rate cuts or even neutral stance from the Fed, I don't see any way around this. There's something I'm going to explain here in a minute though that may sink this type of thing for the immediate future. And it's out there, but I got to say it, and I will. Right there, 85.5. If I had to pick a bottom right now, Joni, that's it. Somewhere right in this zone, 87.5 to 85.5. That would be what I think will be the bottom of this. Now, that being said, my gut, the little guy down in here that can really help you trade when you've been doing this long enough, my gut tells me we're going to wipe it out at 75 and then bounce hard. I just don't know if that develops, and I'm okay with that in a cash play from 85. I don't think that's that big of a draw to take it really, especially if it's a cash play. Now, if it's a derivatives play and you're trading the Bitcoin USD or you're trading Bitcoin futures, then you can't take that hit. But you've got to be aware of what the market's likely to do at a given point in time, and that's going to be we're still bullish here. I mean, I'm still bullish Bitcoin. I'm not a hodler. I'm not going to sit here and say, oh, it's going to the moon. I don't know that. We don't know that. We know that there are no rules in the markets. This thing can go to 50 and then bounce back up to 150, and it can happen fast. Just because we haven't seen it doesn't mean it can't happen. Just because you don't see those great white sharks in the ocean underneath your fishing boat doesn't mean they're not there. They're always there. They're always there. And in order for us to make any money as retail traders, we've got to be smarter than the average bear, and we have to understand that there are no rules. Bitcoin can go anywhere. All right, let's get into some of this other stuff. So Epstein. That's sort of the big news this week, and this is one of the potential implications. We're going to see more of this. We're going to see more of this as some of the names or some of the folks that are targeted in these emails and these documents. Some of these folks are going to eat it big, and some of them are definitely in the financial markets. There's no question about it. Larry Summers resigns from OpenAI board after release of emails with Epstein. They were pretty damning. It doesn't look good for Larry. Larry was a big-time honcho at Harvard University, was a player on Wall Street, had all sorts of advising jobs and had stakes in companies and things, and was sort of looked upon as being an expert in sort of this tech field. It was a player, definitely a player. So OpenAI, right? OpenAI isn't necessarily a publicly traded company, but there are some big names that have stakes in OpenAI, what is one of them? NVIDIA has a big-time stake in OpenAI, and we've sort of let out exactly what we're looking at today for NVIDIA. The earnings are coming out, sort of a negative month, all right? So we'll take a look at our earnings. So you've got earnings coming out here after the market today. If you're trading NVIDIA stock, be very careful. So Summers is out off of OpenAI. NVIDIA's pumped money into OpenAI. I believe Google has. I believe all the big players have significant stakes in this private company for this right now at this juncture. So you've got somebody off of the board stepping down. My point is this: you're going to see a lot more of this. That won't be an isolated incident. You're going to see it in banks. You're going to see it in funds. You're going to see it in companies as these documents begin to hit the wires. Be ready for it. Is that the reason Bitcoin's falling? No, not necessarily, but What happens if some of these folks are in the crypto sphere? What happens if some of the leaders in some of these innovative places, the places people have been putting money since really COVID, the NASDAQ companies, the FANG companies, all these things. What happens if some of these big names start stepping down, start going away? You're going to see uncertainty at the top. And when you see that, you're going to see volatility. So is this a market driver for NVIDIA? Not yet. Maybe if it goes into NVIDIA's board or something, but it does cast doubt on some of the business dealings these things can mushroom. Everything's connected. And once you see one domino fall, then another one falls. And once that starts happening, you get into a period of uncertainty that's unpredictable. So the FOMC Minutes is pretty predictable today. I'm going to tell you exactly what's probably going to be in it. But this stuff's not. And just think of it as I don't know if you've ever seen a helicopter crash on video. It's chaos. This is going to be chaos. Now, we don't know the scope of the damage, but it has begun. And be ready for it. Just be ready for it. Understand that stocks can be hit. Entire indices can be hit. There's going to be a lot of selling if certain folks go down. That's all I'm going to say about it because I don't know much about it other than I know uncertainty. And when uncertainty creeps into the markets, you're in big, big trouble. So right here, take a good look at this NVIDIA stock. We're still technically bullish. We did this in the Switch Markets newsletter. Downside support right there, right around 165, 164, something like that. Pretty darn good buy. So if your earnings after the market come out sort of negative or they disappoint expectations, which are extremely high, NVIDIA's expectations are extremely high. If these things disappoint a little bit, then be ready. If you get that pullback, right down there, right around 165, I'm watching that closely. I would say probably anywhere from 170 to 165. Right now we're trading about 184. More than likely, the stock's going to stabilize, I would say, after earnings. I would be surprised if they aren't very good. But remember, even if it's just a slight beat on earnings, you can still see a major sell-off because, it's that old saying, good's not good enough, right? That's that new Dr. Pepper commercial. They want to fire the football coach because he didn't win by enough. That's exactly what we're talking about. So I'm watching this closely. I think it could be an incredible bidding opportunity and one of those things that you only get a shot at every few months. This could be a good one. A lot going on, that's for sure. Let me see MR. Good to see you, MR. Welcome. Let me see Steve Francis. Hi, Shane. I had the same issues here in the UK with Cloudflare. Did you really? Yeah, Cloudflare's been an absolute nightmare. My stuff's been up and down. I actually couldn't even get into the How to Trade website yesterday morning, and then it went down briefly again today. It's been really crazy with Cloudflare. It's an AI hacking attack, supposedly, so we'll be on the lookout for more of that. All right, the FOMC Minutes. Like I said, I didn't really want to focus on the FOMC Minutes today because, it's not going to be what we think it's going to be. What is the FOMC Minutes? The FOMC Minutes are the official record of the Federal Open Market Committee's meetings released 3 weeks after each meeting. All it is just a written record of the dialogue inside of that committee room. That is it. What the minutes include: a summary of the discussions held during the meeting, monetary decisions that were made, specific reasons for the committee's decisions. That's nonsense. Specific is a broad term. Believe me, bankers don't say anything specific except no. Except when you go to the bank and you need a loan and they say no. That's about it. Other than that, everybody smiles as the ship's crashing. Let's see. The individual votes of each member on policy actions. They give you a vote tally and tell you who voted for what. And details on economic and financial conditions that were assessed. So what you need to remember when these minutes drop here in about 30 minutes from now, the minutes drop, you're going to see a couple of different things. Number one, initially the reporting isn't going to be there. They're going to have an AI thing read it, and they're going to show what's different in this minutes than in the last minutes. And then you're going to see all the analysts and everybody interpret it from there on. Those interpretations and those headlines are what's going to drive the market, not necessarily the minutes themselves. So wait 10 minutes, wait 15 minutes, wait to sort of take the temperature and get the lay of the land before you start trading this thing. All right, the next thing I'm going to say about it is this. What we are looking for as traders is I want to see how much dissent is in that room. Who wanted to cut rates? Who wanted to hold them firm? And is anybody in there thinking they need to hike rates? We want to know the committee's views on inflation and economic growth. Does the committee believe persistent inflation, is a greater problem than potentially rising unemployment? That's the big rub there. And then economic growth, we want to hear exactly what they see as being potentially risks, the biggest risks facing economic growth and what their projections are and what the committee thinks is going to happen with regards to a recession. Are you going to see economic growth or not? That's all there is to it. This is not rocket science. So how the media can spend this, They can spin it in a number of different ways. You're going to see some folks say, okay, well, it doesn't really look like we're going to get the rate cut, or the Fed's cleared for a rate cut. You're going to see a lot of different opinions. Read the stuff yourself. Take a look at it. Watch the media coverage. For me, I'm looking for dissent. I want to know if there was a serious argument about the responsibility of the Fed to cut interest rates in the face of rising unemployment. That's what I want to see. If that's not there, then I'm just going to say this is business as usual. I expect this to be business as usual, not necessarily a big-time economic event like everybody thinks. What does it all mean? What are interest rates going to do? Fed Watch, 21 days. I believe we'll have it here for you live, FOMC Live. I'll cover it. The Fed Watch tool, what do you have? Well, right now, this is a CME Fed Watch tool. The markets believe that you got about a 50-50 chance. You got about a 50 chance of getting another 25 basis point rate cut, and that's down about, a little bit from where we were yesterday. What were we last month? Last month, at this time, there was a 93% chance that we were going to see this rate cut coming up in December. We are now sitting at 51%. That right there is the reason why the dollar is showing strength and the DXY is up around 100. That is it in a nutshell. Simple's good. It is that simple. Our expectations were for 2 rate cuts this year. They are now on the fence for the second one. What was the reasoning? The Fed told us that government shut down. We didn't have any data. That's hogwash. What they don't want to do is they don't want to cut again as they see prices tick higher because of inflation. That's it. So you're going to see this chart right here jump around again tomorrow after NFP. We'll talk about that towards the end of the stream here. The biggest thing you have to take away from this, these FOMC minutes need to show that the Fed is really divided on whether they should make a decision on to cut interest rates at the next meeting. That's what you've got to focus on. That's what it's all about. If I see a division in that room, then we're saying, okay, it's not unanimous. We don't think we're going to get our rate cut. And if we don't think we're going to get our rate cut, that's going to be bearish for stocks, bearish for commodities, and it's also going to be bullish for the U.S. dollar. Simple as that. Sometimes this analysis stuff's not really that hard. That is what it's all about. Shifting expectations has led to a revaluation in a number of asset classes. Okay, let's go ahead. We've covered in the video. We've covered a lot of these things. We've got a trade idea out. If you're looking for a little bit of insulation here, the Euro Great Britain pound, we saw the UK in the EU really drop their inflation numbers overnight. And you can see right here, what do you got? CPI out of the Great Britain ticked higher by a little bit. That's a little bit concerning. 0.4% month over month is not good. CPI in the EU is a much better picture. So you can see inflation theoretically is running much lower in the EU than it is in the UK. This has brought volatility to both the Great Britain pound and the euro. So as far as I'm concerned, the first thing I did is I said, well, let's pull up a Euro Great Britain chart, Great Britain pound chart, pound sterling chart, and have a look at exactly what's going on. And what you've got here is sort of our trade for the day. You've got a good way to get away from the U.S. dollar in these turbulent times, especially with the FOMC minutes coming. And you've got a Euro Great Britain pound trade. Basically, we're looking to bid that 38% retracement level, which is somewhere right down around 87.85. I'm looking at 87.94s, potentially grab about a 50 pip scalp there. And I think we can get it. We're only about, 30-something pips off. So if we do get that pullback down into that kill zone, we'll have an opportunity potentially to bid that thing towards the end of the session. I would like that a lot. Once again, anytime the Fed's active, we've got to be aware that, the markets are going to move and the U.S. dollar is going to move. Sometimes it's best to step away from the U.S. dollar and attempt to look for something else that gives us a little bit of diversification away from that. And what you've got right there is an opportunity to trade something that doesn't really depend on the U.S. dollar. So definitely one that I would be watching. As far as what else we have going this week, we got a few other things. We've got NFP tomorrow. I'm going to have that live for you bright and early, so be sure to tune in. We'll be on 10 minutes ahead of the release. It's our first NFP in a couple of months. I don't know what's going to happen. I can tell you that. I don't know. We're expecting jobs to come down a bit here in the United States. I really couldn't tell you for sure. Friday, S&P Global PMI, Consumer Sentiment. Really going to be a pretty good trading day. We're going to still watch the NFP level as that's digested by the markets. Can't wait for that on Friday as well. News of the day. MBA 30-year mortgage rates were out earlier today. Interest rates creeped higher by just a little bit week over week. That suggests that we're expecting a hawkish dollar You're seeing the stronger dollar right in front of you in your Forex pairs, your Forex majors. And then right here, also the trade balance numbers came out for the United States. Your trade balance is down significantly, negative 59 billion, and we were expecting 61, down big from 78. So to sit around and say the tariffs aren't impacting your trade balance, that's short-sighted. They really are starting to sway things towards the United States, and they're cutting that trade balance down big. It's debatable whether you want a positive trade balance, though. I'm not really sure that that's the ticket either, but you're seeing that be trimmed, and that was one of the things the administration is focused on. Now, Atlanta Fed GDP now 4.2% suggests that there's a GDP growth cycle on the way. That was sort of good news for the United States. We haven't seen really any talk of growth in a long time, but 4.2% for Q4, that's bullish. That's positive. Crude oil inventories, big story there, down about negative 3.4 million barrels. That's a staggering level for this time of year in a 9 million barrel swing week over week. We're now 5% below the 5-year average seasonally adjusted. Ugly stuff. Ugly stuff. Let's see. We got a bunch of questions over here in the live chat. More than happy to do that. Then we're going to go ahead and dive into our gold market, and we're also going to take a look at silver as well. We had a comment on silver earlier and that I definitely wanted to highlight. Let's see. All right, Devil Boy. Hey, good to see you, Tina. Welcome. Okay. Sorry for being late. Yeah, that's all right. I'm the only one that can't be late. You guys can be late. Devil Boy, according to your smart brain, what do you think will the meeting minutes give positive news on the rate cut? No, it won't. Devil, it's not going to give you positive news on a potential rate cut. I think that they're going to talk about the lack of government data is going to be a problem. They're going to say, well, we don't really have jobs data or inflation data. I'm not sure that it's responsible for us to make any policy moves. That's going to be number one. They're going to talk about the government shutdown. That will be in there. So it's a great way for the Fed to pass the buck. I believe that's going to be in there. As far as, are you going to see any evidence, prima facie evidence of an absolute rate cut? No. I think they're going to be very ambiguous. What was the vote? If they're going to give us the final vote on last month's rate cut, I bet you that's a split. I wouldn't be surprised if there was a couple dissenters. I'm not sure what the exact tally was. That's not really important until we see the opinions. But it'll be interesting to see the division in that room, though. I want to hear what the committee has to say about economic growth prospects. I mean, that was a pretty positive number right there from Atlanta Fed GDP now. And remember, the captain of the Atlanta Fed's Raphael Bostic, FOMC member, somebody who says he's stepping down from the FOMC. But that's interesting. So if the prognosis is for positive economic growth in Q4, well, all right. Well, that's fantastic. So that means that you don't have to cut interest rates, right? Is inflation still a problem? Is rising unemployment not a concern? Then you don't cut. I don't think they're going to cut. That's my opinion. But then again, I'm a riverboat gambler from time to time. That's my personality. I don't think they're going to cut. Hope that helps you, Devil. That's my opinion on it anyways. Let me see. Pang says buy. Buy it all. All right. Buy or sell. Oh, you want to buy it? No to buy or sell. Well, let's look at gold and silver here in a minute. I'm bullish both commodities, but we got to get good trade location. Ahmed, good to see you. Ahmed, welcome. So, no, the last thing I'm going to say, no, I don't think you're going to get any evidence of a rate cut. I expect a stronger dollar come out of this thing. Jerome's going to put pressure again, same as last month. I think so, Ahmed. I think Jerome's towards the end of his term. I had him out by the end of the year. It looks like he's going to serve out his term, though, which surprises me. In May, I had him gone. I said, this guy's just going to leave. He's going to get out of it. He's not going to get out of it. He's going to play his term out. He's going to play his cards and then walk. There's a lot of FOMC members that are gone in February. They're going to turn the whole thing over, in my opinion. There's 12 members that are up for review, and I believe that you're going to have a new chair nomination, and they're all going to be doves. They're all going to be folks that are, listen, the administration is going to nominate people that want to cut interest rates. That's all there is to it. What does that mean? See Japan. Take a good look. You want to see a case study of what that'll do in the United States? Take a look at Japan's economy from the year 2000. Look at the last 25 years there. In any case, let me see. T. Marina, Shane, what are the benefits of having a cash trading account versus a margin trading account? Well, cash account's all about staying power, T. So let's say we have a cash account and we want to buy Bitcoin. I can buy Bitcoin right now at 89,000, and there's really no pressure for me to get out unless I need the money. You know, if I got 50,000 into Bitcoin and I'm like, well, I kind of need the money, then I have to sell it no matter where it's at. But if I have a cash position, then I'm good. I'm not going to get forced out by any sort of margin requirements that are violated. The downside of that is I'm only going to make a little bit of money. So let's say I put my 50,000 into Bitcoin right now at 88, and let's say I'm shooting for 125. So what is that roughly for about a 50% return? So I'd be looking at making maybe 25,000 on the trade, right? The biggest thing that I would say is my leverage. I could take that same 50,000 and leverage it way out and turn that 25,000 profit into maybe 125 or 150. Of course, it's a lot riskier because I have to time it just perfect, or else I get margin calls, or else I get account liquidations. And that's bad news. That costs you money. You lose money. So I would say the biggest advantage of being cash heavy is that you have staying power, and even if you have a lot of money, even in the derivatives markets, you have staying power. You can take leverage positions, and that's really what a lot of the big money does. Take a look at some of your Congress people here in the United States. Take a look at their fortunes they've amassed since they've been in Congress. Most of it's by trading stock options. That's a form of leverage. So the upside is leverage. You can score. You can go to the roulette table and make a lot of money. And then the other thing is, well, if you have cash, you can't make as much, but you've got staying power, and it's sort of up to you how you approach it. To me, let's be honest, if you're going to make any real money in this world with cash, you're going to have a chunk of it. There's an old saying, how do you make money in the stock market? What does it take to make a small fortune in the stock market, a large fortune? So you gotta really understand that with the cash, you're very limited, but it does free you up to do a lot of things. I mean, it is pretty easy. I mean, if you're a cash trader today, trading NVIDIA is not hard. I mean, it really isn't hard. It's like, okay, what are we waiting for? We're waiting for earnings. We've already seen the guy from OpenAI step down. I bet you the folks at NVIDIA were talking about that a little bit. They're going to try to get as far away from that as they can, as will OpenAI, until we see the next name drop, and we'll talk about those when they do drop. But this right here, very easy to trade if I have cash. Very easy. I'm looking at 165 to 170. You're jumping in, you're diving in, and you're buying, how many thousand shares do you want to buy? And then that's going to be your play to the top side, and then we just hold it. We just hold it. We say, well, we like the industry, we like the macro trends. We see this thing going to 300, and then we just dive in and we go, we go on holiday or do whatever. If you're a derivatives trader, you got a problem, because if that thing goes against you, let's say we're trading, all of a sudden we're buying NVIDIA on margin, we've got to be a little bit more exact than 170 to 165, and we've also got to time this thing perfect, and we also have to have a place to get out, a place where we know we're wrong. Now, that's hard. That's a much different game. Trading is much different than investing, and I think that's what we're talking about. You say, Shane, what would you rather be, a trader or an investor? I'd rather be an investor. I would much rather be walking around with $200 million in my pocket. I mean, the biggest problem that this financial world has, and that everybody has, I mean, I don't want to get on the soapbox again today. I've been on it all week. But the biggest problem that anybody in this world has with finance is everybody's taking a look at the private jets. They're taking a look at the Ferraris. They're watching CNBC when you got Jeffrey Gundlach on there going, well, I would do this, that, or the other. And Gundlach's worth a few $1 billion. That's the biggest problem. Everybody sits around, they go, oh, God, okay, I got to operate at that level. I got to figure out how to do that. And if you don't have the cash, you can't do it. If you don't have the capital reserves, you cannot be an investor, realistically. Now, if you're a young person and you're putting away, I believe when I was coming up, they said put away $300 a month. By the time you're 40, you'll be a millionaire. Put it in the stock market, you'll be a millionaire. And that's great. If that's your approach, that's fantastic. There is nothing wrong with growing your money over time doing that. Just understand that when we talk about showing up to the yard, what do I want to be? Of course I want to be a big-time investor, but it's not viable. You've got to really look into what you can do, what you can accomplish. And everybody in this room right now can accomplish being an active trader. You can be an active trader. When I first started out, it was one of the things that I was taught. I was sat down. I've told this story before, but I'll do it very quickly. I worked with the 7V Bar Trading Group. My mentor was my uncle, Gary Vernier, in the markets. He was a honcho. He was an ex-Shell oil honcho, and he worked on Wall Street, did very well on Wall Street. And one of the things that he told me was, he said, listen, this is a cash game for right now in your career. This is a cash game. You need to think about making money every day. And he sat me down. He says, okay, what are your bills? What do you need? What do you need to make your monthly nut? And at the time, it was like $2,500, $2,200, $2,500, and that covered everything. I was like, right around $2,500. He says, okay, your job is to trade the Euro FX futures, which are worth $12.50 a point, $12.50 a tick. You need to figure out how to average 9 ticks a day. You need to make 9 ticks a day every day. And your mindset you need to sit down in front of the computer and say, okay, how do you beat these guys out of 9 ticks? Now, that's a hard life. 9 ticks a day, average it over time. That's a hard life. Would I rather have walked in there with $20 million? Hell yes. Make 1 trade a year, 2 trades a year. I mean, that's where the money is. That's when the game gets really easy. So for active traders, we got our work cut out for us, but we can do it. Sit down, take a look at your budget. What do you need to make every day? Cut it. What's your favorite market? Euro USD. How much money do you have to work with? 5,000. Okay. Euro USD, 5,000. What are my lot sizes? What kind of lot sizes can I take? How many pips a day do I need to make? And then you look at the screen and you say, okay, how am I going to beat them out of that every day? And that's about managing risk and not letting the losers get away from you and making sure that your winners pay you. That's all it is. That's it. That's it. That's all trading is. All right, I've droned on enough. Enough psychology. Let me see. Alec, are we starting in 17 minutes? I'm done now. We're going to sign off before the number comes out. Let me see. Tina, investors buy low and sell high. Just watch it maybe monthly. That's all they do. I mean, to be a millionaire or billionaire investor is a great life. You don't have to really do anything. Even when the sky's falling and you take some losses, it's not that bad unless you're stupid. I mean, you're not starving. So, okay, let me see. Sol, great question. XAU USD, what should I do? All right, Sol, let's have a look. T Marina, the power of 9 ticks. That was it. That was what I was told. He goes, make 9 ticks. You make 9 ticks a day. If you make pennies, you can make dollars. Make 9 ticks. So I started making 9 ticks, and here we are. That's all there is to it. All right, gold, fantastic question there, Sol. Let's dive right back into the markets here. As far as I'm concerned, gold is a buy. I like the trade location. You're still above 4,000. Now, if you're an intraday trader or a short-term trader, you've got to wait for better trade location. I think that we've been all over this week. I really love this long-term macro level down at $39.75, about $100 south of where we are now. We may get it, though. If we do get it, that's a fantastic bid for this week. $39.75 is great. This area right here, you can see I have 4,000 marked on our chart, and it's just not an accident. It's just not an accident. We have 4,000 marked. Came off right there early this week, or the 18th. That was yesterday. Went right down and hit 4,000 and jammed higher. So it was actually absolutely a fantastic breakout trade. Actually, earlier today, this breakout right above yesterday's high was beautiful. You see that a lot in gold. You wash out a lot of these shorts. Nice little reversal. Now the market's changing a little bit. We're still active, I think, from 4,000. I think you can bid down there. If you're asking me, is it a buy or a sell right this minute? I really got nothing for you. I don't feel anything for it right now. I think at 4,075, 78, I'm not really into it. I want to see a deeper pullback, something down around 4,000. Now, we can throw it on a 920 on a short time frame and see exactly what it generates. I mean, I like this framework. I like this way of trading, but boy, it really gets to be problematic when you get into these really short time frames. 30-minute chart, what do you got? Okay, right there would be your cross under. That would be your sell. You can't really see the coded purple because it's a doji, but this doji right here, that would have been your sell. So you'd have been selling down here and sort of eating it because the market is rallying against you. In my opinion, if you're going to be a short-term trader here, I probably would be looking to do something like this. Spike low, spike high, wait for a pullback, probably right up in there, and maybe take a shot at it. But you can see we've already done that too. So in my view, let's step back to a 4-hour chart. Okay. You sort of got a sell signal last week. There was sort of your rally. You shouldn't have got stopped out on that. And then there's sort of your negative bar. I say it's no man's land for right now. I would really sit on my hands and save my money. But if you do get a sell-off maybe on this FOMC Minutes, 4,000, something like that might be pretty good. You might have an opportunity to get long there. As far as this right here goes, 39.75 is an absolutely beautiful support zone. Love it. Absolutely love it. I think it's a great trade. You just got to be patient. Being patient's hard. Being patient is hard. That's for sure. Let me see. We got a couple more questions here, and then we'll cover silver. Let's see. John, can you trade from morning to evening? I can't. I have to take a break. I have to go to the gym and lift weights or something. I have to go get some exercise. It's one of those things that's really difficult for me to do, sit here all day and all night. I used to do it, though. I really did. I would trade the U.S. mornings, and then I would come back and trade the London Open for the Euros. And that was a challenge because about 1 o'clock, 1 a.m. my time. So I was looking at getting up and trading from 6 a.m. to about 9:30 or 10 in the morning. And then I would break, go do what I had to do during the day, then come back and eat dinner, take a nap, then get up at 1, trade for 2 hours, then go take a cat nap until about 6, and then get up and trade again. And I mean, it made money. It did make money, but I was not it was really a tough lifestyle, that's for sure. Tough lifestyle. So to answer your question, John, if you trade from morning till evening, you go ahead. If you've got the stamina for it, maybe you've got some automated EAs that run 24 hours. That's great. Absolutely, go for it. T. Marina, that's awesome insight. Well, I don't know if it's awesome, but thanks, T. I appreciate it. Just a trader. In trading, too, we need good patience over time. You have to have it, Justa. You have to have patience. If you don't have the patience, you really run into trouble. And there's a couple of things out there that we probably should maybe bring up or talk about, and it was the idea of patience. That goes back to Jesse Livermore. He had an incredible take on it. It's on YouTube, and that was the guy that was sort of reminiscent of a stock operator, a famous book that was written in the 20s or maybe the 30s. But patience is everything in this game. With small capital, you have to grow small capital over time. Let me see. Bitcoin view. We already covered Bitcoin. I'm watching it crash, though, right now. I'm looking at 80. We're looking at it. 85,750 is what I'm looking at there. Let me see. Surdy. Good to see you, Surdy. Gold reacted on the daily fair value gap. Short, if you ask me. It's not a bad idea, Surdy. I mean, if you're looking at gold, potentially, like I said, I don't hate it. I really don't hate it. If you wanted to hold shorts, with this 920 cross, you certainly could be holding shorts. I think it could get really ugly because of the trend. The macro trend is up, and then the FOMC minutes. So what do you do with that? Let me see. Ridwan. Good to see you, Ridwan. Can we use buy and sell stop to trade the FOMC minutes? Yeah, you can. You can use stop limit orders. Should be able to. That's just more of a breakout trade. You put a buy stop above price and a sell stop below price. And that's just to make sure that it hits your certain level. I traded it today. I used a buy stop over yesterday's high in gold. It worked very well. The 9 ticks wore you down? Absolutely, eyes. The 9 ticks wore me down. It got to the point where, every day you'd show up and you'd say, okay, 9 ticks. 9 ticks. And what happened, like on a Monday? Well, the market was dead. So I found myself forcing trades, to try to get my 9 ticks. And then on Tuesday, what happened? Took a loss, back to even. So 2 days have gone by and I don't have any ticks. So going into Wednesday, I'm going to need to make 27 ticks to get my 9. You see what I'm getting at? You can do it. If you're smart, you can do it. But it just gets absolutely brutal. Wears you down to nothing. I really prefer trading at your own pace. And that's sort of why I do the Tuesday, Wednesday, Thursday, the action, really piling on the leverage during those days. It's absolutely imperative that we're in the market when we need to be, not necessarily when we want to be. Something like that. So I learned doing that 9 tick stuff that you can make more money waiting for just a few minutes when you need to be in the market than when you don't. That's absolutely huge. Let me see. Pros, what's the plan? Well, we're going to look at the FOMC minutes. We're almost there. I've already covered a lot of the markets that we're looking at, so definitely be ready for it. Turn on the commentary. I'm looking at it. I'm looking at Brady. Let me see. Buy or sell gold. We already talked about gold. I wouldn't do anything with gold unless it came back to 4,000. I think it's a little bit overbought, but we have somebody that wants to be short. I don't mind being short either. Let me see. Treehawk. Hi there. Oh, over in the How to Trade community. Hi there, Shane. A bit late to the party, but good to catch up on the market. It's good to see you, Tree. It's been a while. Absolutely. Let's see. Bear market. I don't really think we're in a bear market. We're still pretty bullish. What's happening with crypto, Dandeli? Well, I mean, the biggest thing we're looking at is selling, mass selling. Here's one of my pet rocks that I've been watching. This is starting to interest me, though. Shiba Inu, starting to interest me. You guys are tired of hearing about it, those of you that have watched my streams for the past 3 years. But this is one of those that it's interesting because when you get down to this value area, this is sort of called what I call a value area, an old school value area. You've got a situation here where sort of that's your block, right? Look at all these prices down in here. 5, 7, 5, 5, 7, 6. You're getting there. You're getting into a zone where traditionally, if we go down and we hit it right around that 5 level or that 6 level, you get a 20% bounce, and it happens fast. So I'm watching Shiba Inu very closely here. I think it could be very, very good. That's for sure. Why the panic sell? I think that it's a couple of things when it comes into it's a couple of things. I think that Summer's stepping down off of that OpenAI board today. The links with NVIDIA, there it is. Wang's making a statement right now. So there's a lot going on here with that Epstein list, and I think that's part of it. We may see some of the biggest names in tech, their heads roll. And if that happens, what does crypto mean? What does a stronger dollar mean to crypto? Typically, a stronger dollar is going to mean lower crypto prices, yeah? Well, that's what we're looking at. Let me see my facts, or my mythos facts. Myths and facts. Sorry, I don't read so good. Myths and facts. Sell everything until zero. America resettling its debt. It's damn sure possible. I'll tell you that. Let me see. When FOMC get out, can you analyze Bitcoin? Yeah, all right. FOMC is going to drop in 5 minutes. We'll pull Bitcoin and gold, and we'll take a look at those too. Take a look at it for. Let me see. You were like in a trading boot camp, Tina. Yeah, I was. No, I was being told in no specific terms how to trade and what it takes to trade. And I was taught from pit traders, guys that were in the pits, and there's not many of those guys around anymore. But that was theirs. They went into the pit every single day to make money. I see a lot of traders these days that are happy showing up to the markets and making a couple trades and taking losses and thinking they did a good job. That's not the way that I approach things. And, it's just the way it is. Let me see. Anyone looking for shorts on the NQ? That's a good question there. As far as the NQ goes, let's go ahead and pull it up and see where we're at. Let's go 920 crossover with the NQ. Okay, I want to go ahead and let's pull up a 30-minute chart and see where we're at. 30-minute chart, interesting. So right there would have been your crossover, your 9 crossing under, your 20, which essentially would have been your sell, and now the market's sort of blowing up in your face. The reason why is because these minutes are going to drop here in a second. But right there, you were deep into overbought territory. So, theoretically on this 30, you could definitely have made the case to sell and sort of expect maybe some downside action. At least this thing's selling off down to even. You could definitely be ready for that. Let's go to a 15-minute chart. Interesting there. There's your sell. Let's go to a 5-minute. And there's your 5-minute buy. So, 6 of one, half a dozen of the other. It's a modest up day, I would say, for stocks, but all that positive sentiment's fading fast with interest rate expectations. This should be interesting to see what these guys say. Let me see what else. Will the market run after 2? You're going to see some movement here. You're going to see some move here. Dump. CO. Well, we'll see. We'll see how it goes. Tina, you can't force trade, can you? You're not supposed to force trade. You don't want to force trade. You're purple. The Fed won't cut rates. No, I don't think they're going to cut rates either. NASDAQ's a bid from Cabico. Well, maybe. Something like that. Pros, holding short. Where can we get a live stream of the FOMC? There is no presser. It's not a press conference today. It's just a written release. That's all it is. The FOMC live, the interest rate decision. I'll bring that to you live when Jay Powell speaks, but there's no press conference today. Where can I watch the meeting minutes? The same. You can't watch it anywhere. There's nothing to watch. All right, how about the dollar yen? Yeah, we started out with the dollar yen. That might be a good one to check in on. Let's go ahead. We'll look at this. This 920 is not a bad tool to look at some of this stuff in the short term. 5-minute chart on the Japanese yen. You're sort of really, really tight here. That shouldn't surprise anybody. Let's go to a 30. Okay, 30. Nice big break. If you want it in, I guess I can show you my charts. If you want it in, there you go. It's over. It's over. So, when we talk yen, I would really encourage everybody to be looking at those long-term numbers. Something like this. Is that significant? It's a yearly high. Yearly high's up there right around 158.80, somewhere in that zone. 158.88, depending on your broker. You're definitely headed there. I would want to be long. I really don't know that we could go wrong. Maybe we'll just go ahead and just put a bid on this thing. Put a bid on it and see what happens. Let's go. Let's get to a different account. Oh, there's the trade stay. Oh, there's the leap. We're running pretty good in the leap. We're at about the top 2% of the participants. We got a long way to go, though. We've only made about 20 grand there. But we want to get the, let's see. I want to get a different account going here. Let's try this one. All right, so if we were going to trade this dollar yen going into this FOMC minutes, you could buy the market right now and just see what happens. Now, the reason why you could do something like that is if you pulled up your 920 and you see, okay, we got filled right up here. What do we think the market's likely to do? In my opinion, you're going to see something very, very bullish for the U.S. dollar come out of this. But like I told you, you don't want to trade right now. This is going to be an example of why it's going to be really difficult to really predict what's in these minutes. Okay, the minutes just dropped. Now, what aren't you seeing? You're not seeing a spike in volume. Everybody's on their hands, on their toes, walking on eggshells, waiting. Okay, there's a bit of a move. What happened right there? Why did that tail get big? The tail got big because the spreads went crazy. Okay, now it's breaking in our direction. Are we right or are we wrong? We don't know yet. We don't even know how this thing's going to be reported. We're going to cover it here in a second. We'll see when the mainstream news picks this thing up. Okay, so now we're long on the U.S. dollar, Japanese yen. We can hold it. I would be surprised if any of this works, but we'll see. The minutes, I'm still not seeing the minutes release. Where is it? They always manipulate when they release these minutes. Where is it? I'm looking. Where is it? That's why everything's so choppy. The information is not flowing. It's not flowing. They always do this with the minutes. Always. Remember this. They always do this. Where's the information at? Look at that. Not seeing it. That's why you have to be very, very careful trading this stuff. Very careful. Not seeing it. When is the presser? There is no presser today. Crazy volume. You can see the volume is not there. So right there, we're going to go ahead and hold this. What about crypto, man? Can you speak about it? Yeah, let's look at crypto here in a second, see if there's some action. Yeah, where is it? I don't see it either, Walter. Where is it? What, do we get another Cloudflare outing? Is there a live stream that you can share concerning the minutes? Yeah, we're going to try to read them on air here. Let's go ahead and get back over to Bitcoin, see what Bitcoin's doing. Not really much here today. I mean, it's just been an absolute free-for-all. Let's take this right down to a 5-minute chart and see what's going on with Bitcoin. Nothing. Look at the volumes. The volumes are meager. You're not seeing anything right now. What's going on? Why is everything flat? Because nobody knows what's happening. And when you don't know what's happening, you cannot trade it. Let's go right to a 30-minute chart. Nothing. There's no action. Okay, let's go to let's try gold. Where's gold at? Give me gold. Okay, spot gold right here. We're not going to have volumes anyways. Very, very tight range right there. What else is going on? Gold futures. Gold futures. Take a look at what's going on here, guys. All right, there's our report. The Fed minutes show divide over October rate cut and cast doubt about December. Told you. That's exactly what they were going to report the whole time. So there it is. I'm looking at CNBC. I don't really care for their outfit, but these are the folks that most people read. Fed minutes show divide over October rate cut and cast doubt about December. That is exactly what we wanted to see. Federal Reserve officials were at odds during their October meeting over cutting rates, divided over whether stalling labor market or stubborn inflation were bigger economic threats. The minutes released Wednesday showed. So what does it mean? It means you're not going to get your rate cut. That's essentially what this means. Now, we're going to see reporting all over the gamut. Here we go. This is a quote right from the text. Several participants assessed that a further lowering of the target range for the federal funds rate cut, several participants assessed that a further lowering of the target range for the federal funds rate could well be appropriate in December if the economy evolved about as they expected over the coming intermediate period, the minutes stated. Many participants suggested that under their economic outlooks, it would likely be appropriate to keep the target rate unchanged for the rest of the year. There you go. So there you have it. They're not cutting. So what does that mean? It means that your gold prices are probably going to take a hit. It means the dollar is going to rally. We see the dollar sort of extending gains. I would look for your stocks really to come down towards the end of the session based on that. As far as gold goes, this is actually a pretty darn good area. If you wanted to short the gold futures, that's not a bad area to short them right now. realistically. So if you're going to go here, let's see, right there. I mean, what you would look to do is just take the short, sell it, sell out market right here, and just go ahead and let it go. Is this a smart trade? It's a risky trade. This needs to be more of a tick scalp. You need to be looking to get immediate bearish price action here. But take a look at the spread. Take a look at the spread on gold right now. This is gold futures, December gold futures. That's big. That's a big spread for this market. It's something that you don't typically see during these types of hours. So right now, the market's trying to chew up and digest exactly what that means. It means that our rate cut is probably off of the board. What does that mean for gold? It potentially means that it's going to be a bit bearish. It's going to be a drag on commodities as you get a rally here out of the US dollar. So we're in pretty good shape over here, I would say, on this Japanese yen trade. You're sort of exploding to the top side. That was really a beautiful thing that we had going. That was a good call. This gold futures trade, I mean, it's sort of sluggish. You're getting hit a little bit with the leverage down, but you could definitely rotate lower towards the end of the day. I could definitely see that happening. 38% of the daily range, pretty good area to be short, realistically. But, you know, you're seeing the noise. Right now, it's all about noise. All right, let's get out to Bitcoin. What should that do to Bitcoin? Well, you've got the death cross formation. This is more fuel for the fire to the downside. So if you're looking at Bitcoin, take a look at the 5-minute chart right here. Ignore the technicals. All you need to look at is price action. You'll notice your volumes are very low. You're starting to see price crawl back a little bit. But make no mistake, that's a bearish market driver for Bitcoin. Suggests that the dollar is going to go up and Bitcoin is going to go down. And if in fact that's the case, then you could really run into some issues. If you're theoretically going to be going long Bitcoin. So for me, it's easy. I mean, this really is easy. Price action only. Forget about all the indicators. Boom. Spike low, spike high. Now you're looking for that breakout right down to our kill zone. Love it down there. 85.5, something like that. So there's your low right there, April 2025. That's your yearly low. That's your yearly high. What do you got? You've got 62% or 78% of your yearly range down there at about 85.5. That probably is going to be exactly what you're going to be looking at here probably later today. So I'm looking at 85.5. I'm looking at 85.750, maybe even 87 and a half. That's not a bad bid either. I still want to bid Bitcoin. I view this correction as a opportunity, not necessarily as the world ending. So definitely be watching your Bitcoin because things are absolutely taking off. I think that you're in a position potentially to get that bid, and it's a good one. Let's go and take a look at this gold market. Gold's sort of stagnant. Not much happening. Look at the spread there in gold futures. Now it's starting to tighten up a bit. Now you're not seeing that big bid-ask spread. The market is normalizing. When the market normalizes, we should see some bearish price action. It should be there. We'll see if that happens. And remember, these are demo dollars or whatever. Let's see, Euro USD. This could be the catalyst that drives the Euro USD down to our hammer time zone, which is right around 113 to about 112.53. Beautiful zone right there. These markets are coming our way. That's for sure. Let me see, Fabian. For Bitcoin, yeah, me too. 87 and 85 will be my entries. Thank you. Well, I mean, let's take a look and see what happens. Buy or sell gold? Well, I mean, for me, I think it's a good short-term scalp to the downside. I think there's a real opportunity for this thing to open up towards the end of the day to the downside. As you can see, this trade here is starting to perform just like we thought it would. Okay, now things are starting to get volatile again. You'll notice the spread. As an active trader, always watch the spreads. As the spreads get chaotic, it means that nobody knows what the hell is going on. And if nobody knows what's going on, that gives us opportunity. I think this trade's going to be just fine. We'll let that one simmer a little bit. US dollar, Japanese yen, that was a pretty good one. That was a banger to the top side. How about NVIDIA? Has NVIDIA done anything since the Fed came out and said they're not going to cut rates? Not really. Why not? Because everybody's waiting on those earnings. Now listen, if the Fed's not going to cut rates, theoretically that's going to be a drag on the NASDAQ and big tech. And if you see that, maybe with some bad earnings, we may get a shot down there at 165, 167. It's not bad. Let me see. Steve Francis, a lot of people are saying AI trading is the way forward. How do you feel? I don't really feel very good about AI trading, to be honest with you. The thing about AI, Steve, is nobody knows what the heck it is. I don't care. Nobody knows what it is. And if you don't know what AI is, how do you know how it's going to affect the market? I mean, it's Just an absolutely tough question, man. For me, I think that I would use AI to help me trade. I don't think that I would be using it to trade. I think I would be looking at all the ways that I could use AI maybe to automate or do something like that. But should be pretty interesting, the evolution of the markets, because right now there just is AI traders. And who's to say that an AI trader is not better than a human trader? It's tough. Let me see. Unknown says buy Bitcoin. Let me see. Sunni Sharman. Nobody said they won't cut now, but it's sort of how we're leaning. We've got to get out and take a look at our CME FedWatch index right now and see exactly what we're looking at here. 20 days, 23 hours till our next interest rate decision. There it is. 66% are now pricing in the market to not cut interest rates in December. The market is definitely holding it. Unbelievable. Let me see. What about Bitcoin? Yeah, Bitcoin's got to go down to 87, 5-ish, 85. That's what I would look at. How to get the spread indicator only. Yeah, that's just on a trading dome. That's just a basic trading dome. So like you'd go back to your gold here and you got a trading dome that's sort of set up, and what you'd be looking for on that spread is just, the difference between the bids and the asks. So you can see the way the red is there and the blue's there, and sort of the white meat in the middle is going to be the difference between the two. This feels to me like gold's going to crater. It really does. Let me see. Bobby Bob, what's your take on WTI? Oh, there we go. Now we're starting to cook with gas a little bit. There's our bearish action in gold. Come on down. We're looking for probably about 1,000 on this trade. If we go down and touch 1,000, I'd be more than happy to close that thing out. Pretty good scalp, though. I mean, if you're tick scalping, that's not a bad tick scalp right there. Still a little volatile, but I think this is going to pick a direction here. Back up to break even. That's futures trading. Okay, let's go. My take on WTI. There's Bitcoin. We're coming right into a beautiful zone there. I've covered that a few times over the last hour. Let's go ahead and go to our U.S. oil chart. U.S. oil is interesting. One of those things that, you watch it on the monthly, you watch it on the daily, the weekly, whatever. Right now you're about 59.22. So if you're going to go with a pure price action trade, it's very difficult. Very, very difficult. No question about it. It's really flat. You've seen, I sort of talked about this yesterday, Bobby, the point of control, 60. No question, 60 is a big one. Now, we had a major draw on supply today. That, coupled with probably the chance of strikes on Venezuela, are going to give you an opportunity to hold gold right around, WTI right around 60. But big picture, I still like it to the downside, but I'm not sure when we're going. I'm really not. Today was a big negative day. Sort of reinforced what I've been saying for a while, but as far as, where does this market go in the near term? No clue. 78% was perfect, 58.71 to the downside. It looks to me like if I had to bet right now on on WTI crude, I would say we rotate back up to 60. I think that's probably going to be what happens here. So, intraday, is there any way really to look at an intraday chart? Well, there's our yen trade. All right, let's get out. Let's go U.S. oil. 5-minute chart. What's happening? Okay, there was your bid. Interesting. Let's go to a 30-minute chart. 30 minutes interesting. So if I was looking at this chart, Bobby, towards the end of the day, if you did get the 9 to cross the 20, you can see we were deep. This RSI confirmation, we were deep in oversold territory. That would be a tremendous place for a stop loss. Maybe something like this. Stop loss beneath 58.50. Maybe looking to grab that runner back up to 60. That could be a very nice one-to-one trade. I think 60 is a magnet. I don't think we're going anywhere until we see a strike on Venezuela or we see some definitive action with regards to calling off the strike. So I think it's all about Venezuela right now for WTI crude. Let's go ahead and take a look at our gold trade. How's that doing? All right, 14 hundo. See, that's more than 9 ticks a day. So that's pretty good stuff there. All right, everybody, I'm going to go ahead and sign off. So what's the big takeaway from today's FOMC Minutes? It's been great. Thanks for tuning in, everybody. The biggest thing that I would say that you need to be aware of is we're not going to get our rate cut. You're not going to get it. It's not coming. I think we're a little bit ahead of the curve there. I don't think it's coming. If it does end up coming, you're going to see a big rally. But if we hold firm, be ready for pain. Be ready for a little bit of pain in the commodities markets. Be ready for some pain in the equities markets. And right now, as we go into the late day, the stage really is set for NVIDIA to come down if they miss earnings. You've got higher interest rates potentially. That's a risk. That's risk exposure for the AI sector, for chip makers. You've got to have cheap money to make tech go. That's one risk driver, and the other risk driver potentially would be a missed earnings in the market all of a sudden turning sour and bearish as we roll towards the end of the year. Interesting stuff, guys. That's for sure. Really fantastic stream. I want to thank everybody for joining me. Remember, if you're a new customer over at Switch Markets, Black Friday specials are on the way. So be sure to check in over there. Do it over the next several days. I know they've got some good stuff cooked up to get some new folks trading that haven't really traded before, and also some things to reward existing customers. So be sure to check out the Black Friday specials over at Switch. They'll get you up and running in no time at all. All right, everybody, I'm going to go ahead and sign off. Remember, tomorrow morning we're going to be back. We're going to be back in the saddle bright and early. I'll be in the office probably about 4:30 a.m. getting ready for our NFP Live. Had a lot of fun today with this FOMC Minutes. Please tune in if you would like to see the first NFP number in 2 months. We'll do some more live trading. Probably going to trade some 9 EMA maybe. We'll throw some 9 EMA out there. But I tell you what, this 920 crossover, I really like that. I'm going to be watching that in U.S. oil towards the end of today on the 30-minute time frame. If you have any questions at all, head on over to howtotrade.com. Send me a private message. All you do is click on my picture and send message. Say hi, drop in. If you have any questions at all, you can ask me directly there. And remember, if you need any brokerage help at all, head on over to Switch. Black Friday is on the way. All right, everybody, have a fantastic trading day. Trade the action well. Wow, gold is tanking, and we'll talk soon. See ya.